Man, let me tell you, bro. If you were in Miami right now, if you could only understand how hot it is, boy, I was outside for about 2 hours. For about 2 hours yesterday, right? It was just one of those days where I just felt like taking a very long walk on the beach. And brother, I get home and my back looks like a tomato, a scraped tomato, right? And so today, when I go over my physical therapy stuff and cryogenic treatment, brother, the moment they blew, it's like a hose, right? And they basically spray you with like sub 20 or sub 30 degree air, right, all over your joints and all that stuff. Whew, let me tell you, man, it felt like 1,000 ice cold daggers were hitting my body. So when you guys come to South Florida or decide to move over here, prepare for some extreme heat. Let me just tell you. And the sand, whew, hot dog, man. You want to play The Floor is Lava, you'll be playing a lot of that. But it's great to have the panel here. What's going on, Rob? How are you feeling today, brother? How have you been?
Good, guys. Thanks for having me on.
No problem, no problem. Max, good afternoon. How are you?
You gonna ask me the last question? Come on now. You got one more part to the question. You've been doing such a good job with it.
that's that. We'll do that once we get the show officially started. But Snorlax, good afternoon. How are you?
Oh, I'm doing great, Wabi. I have my hand up because I was going to say, as hot as Miami is, I think one of the most interesting facts about it is that it's one of like the only cities in America to have never recorded a three-digit temperature, I believe. So I do think that's like one of the more really interesting things about Miami.
I think it's the pavement, and the humidity, right, and the sand as well. The hot wind makes it all the more, more intensely, right? The weather guy, I think he's playing me for a fiddle. But it's great to have you on the show, brother. It's great to have Matt on the show. Thank you, everybody who is tuning into our spaces. Shout out to our newsletter subscribers, Discord members, Twitter followers, and YouTubers who are here in the panel, in the audience, and all that good stuff. As usual, this space will be recorded. And shout out to Rob from Digital Asset News for joining us on the panel again. So I guess we can get started. CPI came in at 3%. We haven't had that handle in almost 18 months, man. And I think the risk on markets, crypto, I think we're going to see a pretty big pump. But I want to leave that speculation for Dan. So, Dan, you finally printed a handle where we're close to that 3%, man. So, I guess the first question for you, my man, is Dan, good afternoon. How are you? What do you see in the markets?
I'm great. Again, thanks for having me on. I see in the markets, I mean, we can take a look at just the traditionals. If we pull up the S&P 500, there was a nice little rally today. I think the traditional markets, they see this and see this as positive, and they think, oh, this is great. You know, Jerome Powell and the gang did their job, and inflation is going down. And to a certain degree, they are correct. I mean, we see like, what was it, a pump of 4,400 up to almost 4,500. And of course, with our market itself, I mean, we saw it wasn't. I don't think we saw really anything at all today, did we? Last 24 hours, we're looking at almost a 1% decline in Bitcoin price. Total market cap is down 0.5%. So I think for what we see, the market's like, I mean, for us, it's not like this is the end all be all. And I think people will say, well, this is great because it shows that, the Fed is doing their job, and they are doing their job. They're raising the rates. They know that inflation is going to be sticky. They've said it time and time again that it's going to be higher for longer. It always amazes me how many people are like, no, they're going to pivot anytime soon. They're going to pivot next month. You watch. They're going to pivot. And then it never does, because I don't think people understand the resiliency that the Fed is like, look, we told you what we're going to do. I mean, we can't make it any clearer. So if you take a look at just the CME group, and take a look at the percentage of what they think the target's going to be for the meeting on 26 July. I mean, we're looking at 93% for a rate hike. Current is 500 to 525. They're going to go up quarter basis point and go from there. The big question is what's going to happen in August? Are they going to pause? In September, if you take a look even out there, there's an 80% chance, this is what the market is saying, that they're going to pause in September. They also take a look at November, and there's almost a 70% chance, what the market thinks, that they're going to pause again. And December, you're looking at 60% that they're going to pause. I personally think they're going to keep raising rates. And I know what people will say, well, can they, should they keep doing that? Isn't that like a month out? The Fed does not care. I think the Fed's job right now is to put us into a recession, because you know what always drops inflation, as no matter how sticky it is? A nice, disgusting, fat recession that's going to destroy a lot of the economic game that we have, and then kind of just do a reset. So do I think this is going to be a big rally for crypto? I mean, it could be. I just don't know what it's going to be leading into Q4, going into Q1 of 2024. I don't think the big, huge, monstrous gains are coming anytime soon. I think it's going to be a ways to go. And I think a lot of people would disagree with me. I think they think that it's going to happen pretty quickly, but I just don't see it that way. But I could be wrong. I've been wrong quite a bit.
Good stuff, man. Great hearing from you. As always, man, great to have you back on the show. But, if you're of the belief that the Fed is going to keep on hiking rates, what do you think this means for a lot of the smaller crypto exchanges that are suffocating in Runway and a lot of these other projects? Do you foresee, more of these smaller collapses within the crypto industry, or even the traditional finance industry, as we've seen with Silicon Valley Bank and all of that stuff? And I know some of the other individuals that we've had on the show are of the belief that we might see a Fed funds rate of close to 7%.
Yeah, I think that's the interesting part, right? But maybe you think about it like this. Maybe that's the whole point. Maybe the Fed is well, I don't know if economically this can't be great to destroy all these smaller banks, because let's be honest, the JP Morgans, they're not going anywhere. They're going to be around for quite some time. They have a lot of political interest. They have a lot of political connections. They're not going to be gone anytime soon. It's going to be the smaller to mid-sized banks. And I think with the raise in rates, and then of course we talk about, I mean, you guys have talked about this on your show, just how fast a bank run can happen because of the social media presence. And just even if it is accurate or inaccurate information, people will pull out their funds. And then of course the government can step in and go, well, this is an insolvent bank and we're going to take over, just like what they did recently. And then of course you see small to mid-term banks collapse, which could very well happen. I'm kind of surprised that more hasn't happened. And then of course you have, the big four, they start to collapse, just eat up everything. But the big question, I think, is what's going to happen? Because did Fed Now already launch? And was it July 23rd? I forgot. Let me see.
Yeah, I thought the Fed Now app actually launched earlier this month. I know the news has been quite quiet with all that stuff, man. Quite sneaky, really, man. And we've had a few people on the show that have suggested that the next bull run, where everything truly goes up only, and we see 20-30% weekly candles across all the cryptos. They've said sometimes on this show that might be induced by a CBDC initiative, right?
Sure.
Download Fed Now, submit your payroll, right? If you're a company and you start having your payroll in CBDCs, you get a small incentive, right? So maybe that's like a 5%, 10% bump, whatever you give your employees, right? And any employee that signs up gets a small little bonus check, right? Similar to what happened during the pandemic, where if you worked a certain amount of hours, right, you were incentivized to do so via, they called it I think it was heroes pay. I believe so. Would love to know. Yeah, so would love to know your thoughts on that, because if we really do see rates of like 7, or even 6.5%, there might be a possibility where, you know, the banks, do hurt the smaller end consumer, and perhaps the Fed does start incentivizing for people to use a CBDC. And mind you, when I say using a CBDC, I mean like, you'll still be able to use Apple Pay, Google Pay, all that stuff, but the CBDC Pay or whatever other app they want to use.
Yeah, so I mean, let me just ask everybody, like, have you guys taken a look at Fed Now? And I know this is kind of off topic. No one really, let's be honest, like we're here for crypto and we're talking about Fed Now, but like, I mean, have you seen like
Rob,
the
you cut
fees
off
for Fed Now?
You cut off there
Yeah.
for a bit.
So
There. I think you cut off there
yes,
for a bit. Pardon me.
Hey, Wabi, I can hear Rob. Okay, you're a little bit kind of in and out. Just a heads up, so it might be on your end.
yeah,
Am I coming in clearly now? Testing,
yes,
testing.
Yep,
yeah, you're
yep,
good.
that sounds better.
Okay.
Yeah.
Okay. Okay. All right.
Well,
All right.
yeah. Let me ask you guys: has anybody taken a look at Fed Now and the fees that they're going through?
No,
And
I
even
haven't actually. Have you explored it a bit?
yes, and I got to tell you, like, I know a bunch of you guys. You guys have your own businesses, and I'm sure you know take transactions, credit cards, debit cards across the way, whether you use whatever your payment processor is. But I got to tell you, like I mean, I use Stripe, and Stripe, you're looking at, depending on your transactions, right? It's between 1.99 and 2.99% plus a 30-cent transaction fee. PayPal's the same way. And there's like a host of other things out there. I mean, you can use, I mean, Venmo if you're using like person to person and things like that. But in all honesty, like FedNow, and you can look at right on their website, frbservices.org, you can see that like the participation fee, like per month, and just think about this: if you're doing tens of thousands of dollars, hundreds of thousands of dollars per month, the participation fee is $25 per month. The request for payment is a penny. Liquidity management transfer is $1 per item. I'm reading it right off the site. I mean, this stuff may change. They might rug pull us, but and they say credit card transfer, 0.045, like almost a nickel, and customer credit transfer returns about 5 cents or so. So when I was taking a look at this, I was like, in all honesty, Fed Now, we say like it's the evilest. It's it comes from the Fed. It must be awful. And people will say, well, Rob, they're watching you. They're watching everything you do. They're doing that right now. Like everything that I transact with, the government knows about. It's not like PayPal's not reporting me. It's not like Venmo's not reporting me. It's not like every single exchange that I buy crypto is not reporting me. So like I hear when people say it, but like sometimes we got to take a look at what's a little bit behind it, and that's what we have now. This is just me taking a look because we had talked about this last week, and I was just kind of intrigued by it. So it's not like everything is the most evil thing of all time, but it is what it is for Fed Now.
Yeah, that's actually pretty interesting, man. That they have such low rates and all that stuff, man. But one thing that I do want to shoot your way, brother, is now that we're starting to get some of these good readings for CPI, are you of the belief that perhaps we might see a climb towards all-time high going into the halving for the first time?
See,
Given that should go ahead, go ahead.
no, it's a great question, and you know what? See, like I I have my problem is that like I'm always so adjusted to the 4 year cycles. Like, no, it has to be 2025, right? Because that's what the 4 year cycles have already been, and it's pretty much held true. But in all honesty, there's a lot of smart people out there that are saying no. Like there are some looks, and especially like if you take a look at, I don't know if you guys ever follow Bob Lucas. He puts out a lot of good information, and he's a real good trader. I think he was talking about the tops last time and called it pretty well. And he was talking about how in this time leading up to the halving, which April 2024, and then 2024 itself being the blow off top year. And then there's a couple other ones that are out there that are kind of calling for this left side indices where instead of going exactly 4 years and everything being cookie cutter, that we could see a little bit different of how things run. So for me, when I look at it, I mean, we have the narrative moving forward is kind of uncanny, isn't it? Like our inflation is going down, which is good, because what does that mean? So when inflation goes down, that at some point maybe the Fed will start to pivot and they will do quantitative easing, which would be nice, because that's usually when Bitcoin has done pretty well. Because in 2009 all the way up to the present, we
Fellas, Rob just cut off for me.
Yeah, same here.
yeah,
I missed
sorry
about
about
the
yeah.
past
Okay,
10
okay.
seconds.
Yeah, sorry, someone was calling me on the phone. That's the thing about this app. Like I can't use my computer. It's like my phone, and then I always get calls. But yeah, so then we move into that, and then 2024. What's the big item that's going to happen is we have a presidential election, and I don't personally believe that the Biden administration is going to be in power after this next election. I'm not going to be political, because there's two things I could talk about and it would destroy everything, which would be religion and politics. So I stay away from those. But in all honesty, I don't see him making it. And probably one of the worst administrations so far for crypto and digital assets has been Biden. And then people will say, well, Rob, what about Donald Trump? He was not too crypto friendly. Well, yeah, he wasn't, but he's not in power right now. So I can't really speak to that. So I see in 2024, we have an upheaval. And then, of course, if that upheaval happens, what do you think is going to happen with the cabinet of the people that were there? Well, they'll probably be gone. Now, Gensler was appointed before, but I don't see him lasting too much longer either. So that would be another big thing for 2024. And then, of course, we have the halving, and the one big thing that's hanging over everybody's head is these ETFs, and one could get approved. It could be either BlackRock, it could be ARK, it could be Fidelity, or a host of other ones that come out. One is going to be approved. I just don't know which one it is. I don't know when it's going to be, but at some point it has to actually happen. If all those things happen, and going into Q1 2024, then I think we will see an earlier massive pump as opposed to waiting to 2025.
Yeah, and an interesting data point that we can also reflect on is when we look at when Bitcoin surpassed 20K, we only really had about 4 months of that nice juicy bull run, right? From mid December all the way to the Coinbase IPO, right? For about 4 months. And, we can all say the second half of 21 was all right, but if you really weren't in own forks or layer ones or
Yep.
NFTs for the first half of 2022, then you got blown to
Yep.
shreds, right? Things like Link, Aave, all that stuff peaked majorly going into the Coinbase IPO, and then everything else, had a dead cat bounce, and only a few narratives really made it to go on to make new highs, right? Luna being one. But yeah, we like to not really talk about that one around here anymore. But Rob, I would really like to know some of the narratives that you're eyeing in the digital asset space, right? We now have things like liquid staking derivatives on Ethereum. People are able to lock up their ETH to earn some yield. We now have DeFi on Bitcoin with ordinals and things like that.
Mm-hmm.
So, what are some emerging trends that you're personally bullish on going into the later half of this year and into 2024 and beyond? And the reason why I say that is because typically these new emerging narratives that come about in pre-halving years, those tend to overtake the next run, right? And a few examples that I can give here. Excuse me if I'm going on a rant. I like to do that
No,
sometimes.
right.
But in 2014, right, we saw things like Dash, Monero, XRP come into the fray, right? And then in 2015, right, we saw the Ethereum project. We saw the birth of the ERC20 tokens, right? And then we had the first ICO with Stratus, I believe, like in Q4 2015 or Q1 2016. Excuse me if I'm off a couple of months there. And then after that, of course, what we saw in 2019 was, that first batch of DeFi, right? We saw synthetics, right? We saw Ren Protocol, right? And that sort of brought the idea of bridging your assets between different ecosystems, right? And now what we're seeing is basically earning yield on your Ethereum, right? We're seeing that. We're seeing many of these innovation stuffs on Bitcoin with ordinals and things of that nature. Some devs are even working on a Bitcoin bridge, right? I'm not sure how that's going to work. I'm not a dev. Perhaps we'll have a space over the coming months to discuss with people that are more knowledgeable in that respect. But yeah, would love to know some of the trends that you've personally seen, brother.
Yeah, it's a good segue. There's a lot of exciting things coming on, like with Ethereum, just like everything you just talked about. With Ethereum, and everybody says, well, Ethereum, it's not the greatest platform, and there's so many better ones, so many L1s or even L0s like Cosmos. But I mean, so far there's a lot, if not most, of things that are being built on Ethereum. So I kind of tend to see Ethereum as like the big one, and then of course the other ones that you just talked about, I can see that moving forward. But for me, like the narrative, I think, if we just go back to this ETF, these Bitcoin ETFs, if that gets approved, it will give us so much more adoption and people to get into Bitcoin. And then I think the people that had heard for so long that crypto, let's just say Bitcoin and crypto, because to the normal person outside, there is no difference between Bitcoin and Doge. They have no idea what the difference is. They're just like, I bought that on an exchange and I know it's a cryptocurrency. They have no idea what it is. It's up to us to educate them, right, as they come in. So when these ETFs come in, now it's not just, like a Tom Brady endorsing some exchange, or it's not just some cute Super Bowl commercial that talks about how great crypto is. It's actual people or powerhouses and major movers and shakers in the traditional finance space, like the BlackRocks and the ARKs and the Fidelity, that are coming in and saying, we believe that this is the next big thing, and we're putting a ton of time and resources behind it. And I think people know it, but I think that narrative will kind of lead us down to say, well, why? Why is that such a big thing? And then people are going to start to look at Bitcoin in a whole new light. They could see it as that store of value, as that medium of exchange. But I think, like, if you want to use the rails for payments and things like that on just Bitcoin, I think it's going to be, you can't do it. You can't use Bitcoin as a payments layer per se. You have to use like Lightning. You have to use a layer 2. You have to use a smart contract like Stacks. And you can do those things and build on the rails that is Bitcoin. I think that's one of those narratives I think that I'm excited to take a look at, because if that's the case, then you can just hear more the narrative of the same. So I see that as a narrative. Of course, the Ethereum and everything else moving that way. And the last thing I will say is my personal belief is that there's going to be a huge amount of gaming for crypto. I know, like, when people look at it, they're like, why do you think gaming is going to be such a big thing? Gamers, and there's this site I'm always talking about, and it's called Exploding Topics, and it takes a look at just data points. And one of the things that blew me away was that there was globally, well, right now, okay, in the world, we're looking at 7 billion, give or take a billion or so, 7.8 billion people. Roughly 3 billion are game players, and that could be anything from like a hardcore gamer to like a total like casual gamer who just like plays a little bit something on their phone. And then Asia, it has 1.5 billion gamers. And then the big thing is, of course, Asia leads it. There's so many different gamers that are in there. And then the proportion of gamers that are out there, the most and the highest majority of people that play, 63% are casual gamers. So to me, like, when I look at these games, and people will talk about, to be able to, to use the NFT, to own your skin, to own parts of the game. But I think it's even bigger than that. I think gamers and just anybody who wants to get into it, to be able to like hold the power to direct that particular game as like in a DAO. I think that's the bigger play than what the NFTs are. And you could actually do revenue sharing with different games. And of course, the tokens and the NFTs like we just talked about. I think that could be the next big thing because it actually has real use utility for crypto, and we can do it right now, as opposed to doing something like in DeFi where it's like, well, I'm going to stake this to get more of these. Well, what do those tokens do? They don't do anything right now, but maybe in a year or so. So to me, when I see the narrative, I see it as the Bitcoin kind of pushes everything first, and then we can see a lot of things being built off, and then of course gaming.
All right, good stuff, man. So when you talk about gaming and places like Asia and all those things, and for those of you in the panel, don't worry. After I'm done with my next question, I'll pass it on over. We'll do Max, Matt, Tucker, Snorlax, Dow, and Beardy. Beardy, brother, welcome to the panel. Usually we bring up the community towards the end, but great to have you here, brother. If you can give us a couple more minutes, man, we'll get right to you, man. Don't worry about it. But welcome to the show. Welcome to Because Bitcoin, man. We do these shows all the time throughout the week. Feel free to follow us, man. Great to connect with you, brother. Hope you're enjoying the show. But Rob, listen, brother. One thing I want to throw in your direction. We're mentioning gaming, right? We're mentioning fun, and we're talking about Asia now and all those things. But if we bring it back to America, right? And I'm going to bring it back to Gigantic Rebirth, right? GCR, and he talks about the online casino, right? And when we look at revenues across America, the casino landscape is just as big as the gaming landscape here in America. Some of these casinos make out like bandits, right? Tax cuts, all that stuff, and their profit margins are insane, right? And if the pandemic taught us anything, is that desperation knows no limits. And when we look at platforms that have been built within the crypto landscape, one can say that some of these gambling protocols or casinos, whatever you want to call them, that could also be factored into gaming. And some of them have the nice UX, the UI, whatever you want to call it, good transactions, a lot of these nice aesthetics and all that stuff. Would you factor in, right, these new casino type platforms within the realm of gaming as well, or do you see more of like maybe things like I don't want to shill here. This is by no intention shilling, but the things that Yuga Labs are building, things like Illuvium, right? They're building these AAA type games. Would love to know your thoughts on both sides of the coin, brother.
Yeah, see, that's the thing. There's this term, loot boxes, and in Japan, I forget the term it is, but essentially it is gambling. And when you're playing these games, and we all know these games, they all start as like casual games on your phone, and then like, oh, take an additional spin for $1, and then most people won't do it, but some will. And they don't. And of course, the gaming industry doesn't really care about the 90% that don't. They care about the 1% to 10% that do. They take that spin and they're like, oh, you won this. And before you know it, you're like, and if you want to, put more up, you can win, even more things. And I lived in Vegas for 2 years. There's no difference what they were doing in gaming to what they were doing in gambling. It's just they don't call it gambling; they call it gaming. And there's been lawsuits. There's been different Reddit posts about this entire topic, and unfortunately, this aspect of gaming it's been regulated to a point, but not enough to where it could be. I mean, I'm not going to get into what should be regulated. I mean, I'll leave that to Gary Gensler and his band of merry men, but what they're doing. But when they do these things, it really does become gambling. And unfortunately, that is what pulls some people in. Now, most people can handle it, right? They can say, well, it's gambling, I'll put a little bit in. But that's essentially what most degen crypto traders are doing anyhow. It's gambling. Let's be honest. So for this whole part, as far as like with gaming, that aspect is what makes these games so popular and blows things up. So it's not my job to corral everybody and tell them don't do this, because it's freedom. You can do whatever you want to do. I'm not your dad. But if it's me looking at what could be the next big thing, and there's a bunch of different games that have these, I always forget the term, Tamagotchi, but they're loot boxes where you can actually gamble within the game to earn tokens whether that be Web 2 or Web 3, I see it as a big expanse. And so, yeah, to answer your question, I think gambling is essentially going to be big, whatever they want to call it in the gaming industry.
Great stuff, man. I actually pass it on over. Since we're talking about gambling, actually, in some platforms, I want to throw it over to Snorlax, man. He's an expert on finding some of these things, man. Mr. Dream Machine, Snorlax, what's going on, brother?
What's good, Wabi? How you doing, guys? No, I
Good.
the topic of gambling in crypto is such an interesting one to me because, I always say that I feel like the meta that crypto is a Ponzi and that it's a casino. It's fine as a joke between participants, but I think when you're kind of branding the entire space as that, it can be potentially problematic, when you're looking at, further user adoption than what we've seen so far. But that is a big reason why I'm bullish on DMT Dream Machine token. I'm not going to turn it into a shill, but it's basically an online casino. Most metaverse games are games that you can't really play them. You can't really play them whenever you want. I take that back. Well, people can play them whenever they want, but if their boredom is setting in crypto, you're not going to see them actively seek out to play those games unless they get a token incentive or the token is pumping. Whereas with DMT, already have games that people have played for a long period of time, right? Like poker, Uno, adding a version of RuneScape as well. So yeah, I just from that perspective, I appreciate it, but I do think we have to be really careful with the casino meta as a whole for crypto, because it will be difficult if that is the public's perception of crypto just as a casino, rather than the bull run was driven in 2021 and 2020 by it being the future of finance. And I always say that crypto's narratives being so malleable is a big reason why I believe that there will be future cycles, but I think you have to walk a pretty fine line with that as well.
Yeah, you got to walk a fine line, and I agree with you. The thing that I have to be aware with is that if we don't give people the information, like saying, like, look, like some of these projects are gambling, and I understand what you're saying, that this specific product is not gambling. This is a whatever it is. But if I don't say these things, then people are like, oh, this is going to be a great opportunity. And I think the problem is with some people is that when they don't hear these things, it's like things get turned off in their mind and they just start taking more risks. And I wish years ago, when I was talking about Celsius and I was talking about Voyager, and thank God I didn't talk about FTX, but if I would have said more of the stuff, which is like, look, this is super risky, and some of the things that are on those platforms are more risky and almost gambling to an effect, I think it would have been more conducive for people to be like, well, okay, wow, this could be more of a risk than what I thought it was. Unfortunately, Celsius was brought out to people like it was a safe savings account. And a lot of people put their entire savings into Celsius. And because of that, now they're broke and they lost their entire life savings. So I understand where you're coming from, but let's be honest. A lot of the products out there, it's gambling. And
I agree with you. I agree. I agree with like everything that you said, like principally speaking. I would just say that, when we're talking about what does the future of adoption look like in crypto, the periods of greatest adoption within the space will always come when people are most willing to take risks, because in general, it is simply a risky asset class. So I agree with the principle that people need to be safer to operate, but crypto and the space as a whole will always, experience the best times when people are willing to take the most risk. It's kind of an ironic.
No. You're right. You're 100% correct.
Did Dan get cut off, fellas?
No, I was just agreeing. That was it.
Reflecting on Celsius a bit, I never used Celsius. I created an account just for the purposes of exploration on their platform, because it was gaining traction during the last bull market and was growing in popularity. And of course, it was hard to escape a lot of these, very very highly funded centralized lending platforms like Celsius and BlockFi. And I remember seeing, I believe this was their slogan. If it wasn't this, it was pretty damn close. So don't hold me to it exactly. But I believe Celsius's slogan, or one of them, during the last cycle was "unbank yourself" or something along those lines. And I thought to myself at the time, okay, that sounds really nice. Nobody likes the banks. I don't think anybody besides Warren Buffett likes the banks. Everyone's kind of like, the banks have never done anything for me, and they've been basically taking my money and paying me virtually zero dividend to hold all of my liquidity, and then they turn around and they lend it out to my neighbor, and they make the spread on what they pay me, which is virtually nothing. And they're making a bunch of money off of me, and they've been they've been slaughtering Americans on credit card interest rates for decades, and they have participated in predatory lending, and it played off of the emotions that a lot of people innately feel. Their distrust of banks, they're naturally repelled by these organizations because of how they've been treated for their entire life. Basically being forced, you have to use a bank. Like, there's no really other option. There hasn't been up until the invention of crypto, specifically Bitcoin, which Bitcoin truly is the unbank yourself. Like, if you want to get as close to banking yourself, it's going to be Bitcoin and a cold storage device. But I thought to myself, when I saw this Celsius slogan, I thought, man, they're playing off of people's their distaste of these organizations, and it feels a little bit predatory, especially since they're offering an 8% give or take APY. I said, there's just no way that these assets that are being collateralized in this lending protocol, which again, unbank yourself, like, implies that you're holding them yourself. Somehow your mind naturally goes there. Unbank yourself makes me feel as though I'm in control, when really you're not. Alex Mashinsky's in control and his team is in control. Where are they making the spread? If they're paying you 8%, who's paying them 10%, for them to even make a couple points? So I never got on board with it. I never was looking to generate any yield. My thoughts around generating yield during the bull market, I think there's a time and a place, right? But it has to be viewed as gambling. You don't need to generate a yield on your crypto in order to have exponential and life-changing gains in crypto. Your spot holdings, kept safe in a ledger or any other cold storage device, should rapidly appreciate enough, if timed correctly, if you're earning 8% APY, it shouldn't make the world of a difference, right? It wasn't worth losing all of my principal for an additional 8% principal increase, and then the potential appreciation thereafter. But I feel like I love the idea of generating a passive yield, but you kind of have to ask yourself this whenever you're presented with it: if it looks too good to be true, it probably is. Okay, you could maybe beat the banks by a little bit, but not that much. Okay, if the bank's paying you a quarter of a point and Celsius is paying you 8, 9, 10% fixed, it seems a little too good to be true.
Yeah, it also, like, even if you take a look at that, look at the staking rewards that we get on some of these cryptos. Like, there's a great website, stakingrewards.com. You can pull it up and you just see like what the rewards are just right now. And like, I'm looking at it, and some of it's pretty ridiculous. Like, and I understand where they're going from. Ethereum, they're saying roughly 5 adjusted rewards are by the inflation of the network. BNB chain 8%, Polkadot 15, 20% for Cosmos. Of course, those are super high inflationary type of things. But no, you're right. And these things that we talk about, and I'm not saying that staking is awful and you shouldn't do it. I mean, it has its place, but just know just how inflationary that actually is. Just like when we print money here in the States. But these things that we just talked about, I think in the next bull run, we're going to know about those things, and the people that come behind us, they're going to hear about it, and they're going to, I swear to God, and everyone's going to laugh at me, but it's because it's true. The new people that come in, you're going to tell them these exact same stories, and they're going to tell you, I don't care how old you are, they're going to say, okay, boomer. And they're going to say, that was last time. that shit's not going to happen now. Because there was the same thing like I always talk about with like Mt. Gox. Like I heard about that. I'm like, man, there's so many backups. They're not going to shut down exchanges. That's crazy. And then of course, exchanges shut down. And then moving forward, it's the same thing, continuously happening over and over again. So everybody who's here, it's our job, like I just talked about, as far as like educating people. That's one of those ones that, and you put it very eloquently, the interest that you're gaining, what is the yield? Where is it coming from? And does it, even though they give you an answer, is it really possible? You don't need massive yield or even decent yield. Just buy and hold, and things actually work out better that way.
I remember hearing somebody discuss this. I believe it was either on YouTube or Twitter Space during last cycle. They said, if you don't know where the yield is coming from, you are the yield. And that's something that I remember to this day. Holds true.
Yeah, very much so. I mean, that, and of course, even if you look at like treasuries, what is like these days, like a 3 month and 6 months treasury yield? What does anybody know the percentages? I think it's pretty high, much higher than I remember them being.
Yeah, I got it up in front of me. The 3 month is at, looks like 5.4%.
Incredible.
Yeah, I don't have this. The 1 year is at 5.35. So
that's pretty. I mean, think about it that way. I mean, that's an amazing amount of yield compared to like just 5-6 years ago. It was fractions of a percentage, and now here we are. So I know like when people talk about the inflation rate, I'm like, well, I mean, just take a look at what they're paying in yields. It's still looking pretty good for the people that are getting into that. That I think would be one of the safer plays. But yeah, amazing to me you can get that much these days.
I love it, and for the first time in my my adult life, I've been able to generate some sort of passive yield. So I'm 27, so I haven't been around that long. But in my professional career, I mean, I entered the business world at a time when there was really no attractive availability of any sort of fixed rate, at least that I can remember, really beyond like a couple percent here and there. The big pitch on them was, well, there's tax benefits to it. And I was like, what the hell? What am I going to do? I've got $5,000 in the bank. I'm like 20 years old. What am I going to? I'm going to earn a couple percent on this, and you're telling me that the tax benefits are there. I don't care. I was like, I need to double this. I need to triple this. And of course, we're not talking about that. We're talking about 5.4% on a 3 month note, while the inflation rate's at 3%. It's a nice spread comparatively to where we have been historically, in the past 5 years or so. But I mean, I'll tell you this: if I had $100 million, I'd be jumping all over this right now. I mean, for the first time, you don't have to press yourself to generate, 5-6% return. Uncle Sam is the best tenant that you're going to find. I mean, talk about a guarantee that you're going to get paid. It'd be such an extreme circumstance that you wouldn't get paid on that note. I don't know how more people aren't jumping on it. I personally am jumping on it. Again, I don't have $100 million, unfortunately, but I actually, and again, not to shill, and some people might make fun of me for this, but I actually do a decent bit of my equity trading on Robinhood, really for the purpose that they pay 4.65% on a fixed rate. And there's no lockup or term on it. So I can pull it out whenever. So I've got money sitting in there. They pay me 4.65%. Again, inflation, the headline inflation just came out today. It's at 3%. So my money is outpacing that of inflation. And while I'm looking for opportunities in the market or potentially scooping up assets that I would hopefully own at lower prices later this year or early next year, I'm earning a nice passive yield on it. It's an absolutely wonderful situation to be in. So I'm loving this environment, really, because there are opportunities and things are moving. But in the meantime, I don't feel any pressure to have to deploy my capital because it's being passively deployed and I'm not losing any of my purchasing power.
Yeah. Want to know what that's called, man? You guys want to know what that's called? That's called Powell-fi. That's called Jerome Powell DeFi. Jerome Powell in late 2021.
I'm staking with Jerome Powell.
Powell's getting jealous that we were all printing with Forex and Solana DeFi and all that stuff. And he's like, all right, boys, I'm seeing Do Kwon give out 20% APY. I'm going to show you how it's done. And,
yeah. That's a t-shirt waiting to happen. Steak with J-Pow.
Yeah, man.
Dibs. We're making it. Dibs.
Talking about gambling and all that stuff in casinos, Max, I know you were a a big proponent of Solana, man. So I guess we can throw it to Rob's way. Rob, man, do you think Sol's gonna come back from the ashes now that we don't have the looming death stare of Alameda or SBF, or do you think that's gonna be sort of like how Neo was or EOS was in the last cycle? And something interesting that I've noted within crypto Twitter, which I observe like a hawk, I'm constantly in spaces and looking at sentiment and all that stuff, is anytime Solana is deemed dead in the water, it ends up pulling out like a god candle. I think it's up like 100% over the last couple of weeks, and year to date it's still pretty good. I think the yearly open for Sol was at like $9, just under $10. And mind you, this is not a Solana show or anything like that. I don't hold any Sol. I just we're just here to talk markets and talk about future narratives and things that have happened over the last year or two. So would love to know your thoughts on that, Rob. And yeah, man, great to have you here once again.
Yeah, thanks, guys. I actually DCA into Solana. I know people that might be surprising to them, but I don't know. First of all, I don't know a lot of things. Let's be honest. But one of the things I don't know is I don't know who's going to be the winner of these layer ones or layer zeros. So to me, like I look at the things that are around right now that I know about, and who knows, the next big layer one, just like Solana wasn't really a thing, it wasn't didn't come about until, gosh, when did it actually? In 2020, came out of nowhere and went from nothing all the way up to $200 and some. So I take a look at it, I'm like, well, there's something else that will probably do that, but I don't know what that is yet. So to me, I take a look at layer ones and zeros, and I'm like, well, the Ethereum probably do pretty well because everything's built on it. You can take a look at Avalanche. You can take a look at Near. You can take a look at Polkadot and Solana and just see what's happening. I will say, though, that, if you take a look at where developers are going, I know people get pissed off at the fact that, like, well, it has this issue with uptime and it's not up all the time. And there's my project is up, 24/7, 365. I'm like, yeah, it's true. It is. But you never know, when things really take off. So for Solana, again, I don't know, but I can see that if you take a look at the things that, first of all, didn't they pull a phone out not too long ago? I was able to roll that out. It wasn't like a big thing, but at least they got it actually out there.
Yeah, I think that's more of like the Nokia or the beeper as far as like crypto innovation is concerned. It started the trend, but I don't really think it's going to be like that one thing, if I'm being quite honest.
No, it's not. It's not going to be that thing, because like I don't know what the sales were, but I was just impressed that they actually got it out and actually did something with it. So I've seen like there's a sites that you can take a look at where the developers are going, and you can see that Solana, there's still a lot of people building on Solana. I think it could actually work. Can it be the next big thing? I don't know, but I don't need everything to go up 1,000x. I just need a couple of them to do pretty well and go from there.
Yeah, man. We can pass it on over to Tucker. Tucker, what's going on, brother? Great to have you on the show.
What's up, guys? I've been enjoying the conversation so far. I was just looking through your feed a little bit, and so just one interesting tweet that I saw. You said we're not at 2% inflation yet. That means more rate hikes. Do you think we actually get more rate hikes? I know what's priced in right now, but I worry that the risk is now skewed towards deflation rather than hyperinflation, right? Like I worry that we may have potentially already over tightened. Do you have any thoughts there?
It could be. Some people say that it's not going to be the deflation itself. Some people think, well, that could actually happen. We could have deflation, but some people are talking about stagflation. But I take a look, because we've seen some economic growth that slows down, stagflation, right? Inflation goes up and unemployment goes up. Well, the inflation hasn't increased in this situation. Unemployment, I think, didn't we just see a little bit of a higher unemployment rate just come out not too long ago?
Very slight.
It's been pretty steady, yeah. I think a slight tick up, but it's been pretty tight.
Yeah. So like that, like some people say, well, it's going to be, stagflation. I'm like, oh, I know it was that, but total deflation. Are we talking about deflation or disinflation? We're talking about disinflation where, inflation just slowly goes down. Are we talking about, deflation where things kind of falling apart around us?
Well, I just worry that all these rate hikes are going to kind of hit us all at once, and we're going to kind of blow through that 2% target and
Oh, I see.
potentially see deflation. Just between that, the sticky unemployment and the big drop off in M2 money supply, it's setting up that way potentially in the next 12 to 24 months. But I could be wrong for sure.
No, I mean, like I've heard that. I've heard people talk about it coming about, and it definitely. I mean, there's always a possibility for everything, right? I mean, deflation come about, and then you could just see just a massive reduction of prices all across the board. But then demand goes down, and it's to me when I take a look at it, I think me personally, I don't know if the data that the Fed is looking at is the top notch, most precise, time sensitive perfection of what they think it might be, and they're actually raising a little bit too much, and then we'll see it later down the road. So I think I have always thought that what they'll do is they'll look at this and say, well, we're slowing down, but not slow enough, and we're going to keep raising rates. They may pause a couple of times. I see at least. I mean, we know there's two more rates coming, if not three, maybe what, July, August, September, October, November, December. Yeah, at least not four ahead of us. And even if they do that, and then we start to go down, then what happens? Well, then we're in a recession, which I kind of saw where things are going, and then we're in recession, and then kind of just drops everything to the ground, and then until we have to crawl out of that over the next year or so. So I just always thought that they would raise the rates. They would say, "Whoopsie, we did that too much." We would hit a recession. Hopefully, they think it's a mild recession, but they also said that inflation was transitory. And then we suck it up for a year or so until we get back on our feet. But remember, even if we're in a recession, the economy recovers after the market recovers. Market recovers first, then the economy recovers, and then off we go.
Yeah, and I definitely think if we do see ourselves in a situation like that they'll probably end up just trying to print their way out of it, which
is good for us.
Known to do. Yeah, it's good. It's good for asset holders, that's for sure. But yeah, that's all I had. I wonder, Matt, what do you make of today's print? And do you have any, like, you're kind of our resident labor market chief officer. What do you make of the recent numbers?
Tucker.
Oh,
Careful, Tucker. I just want you to be careful with your language because down there in the crowd we have Big Joe Carlos here, man. When we mention
I
chiefs,
didn't see Uncle Joe.
Yeah. We have to be careful what kind of chief, right? if it's head chief, you gotta. It's Joe, dude, right? Former head chair of the Federal Reserve, tutor to Warren Buffett, basketball coach to Michael Jordan. Continue, fellas.
yeah, I think I tweeted about this earlier in the morning. The headline print is interesting, but the trend is what's important. And I mean, if you're going back, we can now go back 12 months. We can go back over a year and see there's a clear trend of disinflation with CPI. And even if you don't like CPI, fine. Trueflation has been showing disinflation for over a year. Okay, fine. You don't like Trueflation. Well, Wisdom Tree, they even show on their metrics, their inflation tracker. Actually, they're showing that we've dipped beyond disinflation into deflation, to Tucker's point. So that was a little eye-opening. I hope that's not actually true. But no matter if you're using government metrics or private industry, everyone is seeing the same trend for the better part of a whole year of inflation is cooling. And so far, knock on wood, our labor market in the U.S. is holding. We've been at, call it 3.6, 3.7, 3.5 for almost 2 years now, and that's As long as the labor market is holding strong, I agree with Dan that the Fed and Jerome Powell has no reason to take their foot off the gas. They want to kill inflation. They want to make sure it's dead and buried, and they're going to stick to the task. They're going to do the job. Jerome Powell, he's 70. He's not
Mm.
running for president after this. He's not running for this is kind of it. This is his legacy. They gave Ben Bernanke a Nobel Prize for quote unquote saving the world economy in the U.S. a decade ago. And you got to think that Jerome Powell has that in the back of his mind. Like, I want to be remembered. If I'm still alive, I want to be remembered and considered for a Nobel Prize. So they're not going to get wishy-washy at the 11th hour. I expect they will keep hiking until core inflation is closer to 2%, or if unemployment falls off a cliff. Just my 2 cents.
I can definitely, yeah, I can definitely see that. And that's a good point about Jerome being, he's up there in years. Now I start to think about, well, what do I leave behind for my kids and my grandkids? And I know some people will say, those guys don't care. It's just power and money. But at some point, you have to start thinking about what is my legacy? Am I going to be Chair, Burns, or am I going to be Volcker? Who am I? Was I the person that pulled the United States and avoided a depression? Was I the guy that did that, or was I the guy that plunged everything into a hellscape? And I think that's what if it was me, I would take a look at that and say, that's what I don't want to be remembered as, the guy that destroyed the entire economy that is America. Even though, I mean, you have to look at the worst of two evils. Do I want to keep raising rates and then pumping things down, or do I want to let my foot off the gas just like Burns did? And then of course it starts to go up. But there's a lot of nuances to that, and I'm not an economist to go into it. But I have to agree.
Something more in your wheelhouse, Dan, and thank you so much for taking the time with us. I've actually followed you and your work, your channel for years now. Can't believe it's been another cycle. Yeah, you bet. So I'd love to ask you, in retrospect, hindsight's 2020. FTX, Celsius, BlockFi, they get all the attention, but actually we're leaving out Voyager.
Yeah.
I know you had some red flags that were popping up to you with Voyager. You even on multiple times interviewed Steve Ehrlich, but maybe you could walk us through, when did you realize this is not just trouble onboarding new users, there's trouble under the surface, and then started warning people? So
this is one of those things where, we're always like, I hate regulation, and we hate the fact that there's all this oversight, and we can't believe this actually happens. But I got to tell you, the reason that we knew that Voyager was having problems is because of their public filings, because they're a publicly traded company. They were. And it came out that they did a loan to Three Arrows Capital on a piece of paper, for Pete's sakes, that said that they had $630 million. And they gave them that loan. And Three Arrows Capital said that, yes, we are collateralized, when they weren't, just a piece of paper. And when I saw that, and it was uncollateralized, and you guys know this, that's dumb. That is the dumbest thing you could possibly do. And right at that moment, I go, this isn't an organization that is good. This is an organization that's going to fail. And that was released because they collapsed on July 3rd or 4th or 5th, 2022. And that was released 2 weeks before. So I put out a video, and that's the video that I have a timeline on the description of all my videos, which I talk about. This is when I said, hey, Voyagers just did this, and you should pull your money out. And I did say, I'm still going to use the exchange, because that's what an exchange is for. Exchange is for me to go in there and buy crypto and then pull it off and put it onto my cold storage device. And that's when I figured it out. And then I asked Steve to come on, but he didn't want to come on. He said there was some legal issues, and I was like, that is another red flag, and that was it. So we had 2 weeks, and some people, heard me, and some people didn't. And I wish I never talked about Voyager or Celsius in my life.
It's okay. I mean, I think what's, if I could give you some kudos, I think there's a lack of let's just call them public figures that are willing to call out when they see red flags. There's obvious incentives that make that a tough call. But I remember specifically that video. I remember all the chatter, and I remember all the pushback and flack that you got for quote unquote fudding Voyager.
Yeah,
But
the FUD.
I'm sure but I know, I don't have an account with Voyager. I'm just observing the news like you are. But I know I wasn't the only one who heard that warning. So I gotta believe that you did some good there.
Thanks. Yeah, I did it. Just I think if I would have done it, wish I would have done it sooner instead of 2 weeks before. If that report would have came out earlier, but it didn't. And that's why, like these things that we talk about today. I mean, everybody here will remember these stories, and they'll tell the people that ask them, "Hey, should I buy Bitcoin or Ethereum? Do I have to buy a full Bitcoin?" It seems like a lot of money, $75,000 or whatever it is when they say it. But then you guys can remind them that, hey, you know that where you buy that, you want to leave it there because XYZ has happened before. Not just Mt. Gox in 2014, but this other thing called Voyager and Celsius and god awful FTX. And we can remind everybody. And it's not that hard. It's just that it just takes a little bit of effort. Just like at some point, no one knew how to send an email. I know if you're young, you're like, that's crazy, but I'm old enough I had to actually learn how to do that at some point. I had to learn how to, like at some point, how to use a debit card, how to use a credit card, how to avoid the different scams of on the internet. It's just all these things you can learn. You can learn this stuff. It's not when people say that, this cold storage device is too hard. No, it's not. It's not. What's hard is losing all of your life savings, and because you kept it on some shitty exchange.
Oh yeah, definitely agree on that, man. And this definitely isn't the last time this is going to happen in crypto world. But want to give Beardy Day a chance to speak. I know he was having his hand up, and thank you so much, brother, for being patient with us. But welcome to the show, man. Welcome to the panel. If you have anything for us and Rob, go ahead, man.
Oh, Lord, it's Beardy.
First off, I just want to say I kind of feel like Chris Farley. You remember Chris Farley in the movie Black Sheep? He's like, I'm not supposed to be here. I'm kind of shy, so this is the first time I've ever been. I don't know. I'm sorry if I broke protocol. I don't know what the hell's going on. And then all of a sudden I'm up on stage, and then so I'm sorry about that.
Yeah, Beardy. Beardy, what's you got, buddy? What's happening?
Yeah, I just along those lines, my father-in-law, he got pinched in. Well, Rob, we just talked about this yesterday on there.
Yep.
We did a little stream. He's got about 20,000 stable coins and Celsius, and I'm trying to help him out as best as I can. But I just want to come up on stage and say I'm just thankful for all you guys, and I'm just thankful to be alive at this time. I got into crypto about 3 years ago, and just trying to get out of the rat race, and following guys, following Rob, and sorry, I'm a little nervous, but I didn't think I was coming up on stage here, but I just want to say thank you guys for all you do,
Yeah, we appreciate that, man.
Thanks, Beardy.
Thank you, man, and thank you everyone here in the panel for participating, and shout out to the audience. Thank you guys so much. If you guys are enjoying this content, we are Because Bitcoin. We've been around for a couple of quarters now, and we enjoy talking about all things financial markets here with you guys on Spaces and on YouTube. And if you guys are enjoying this content, feel free to give us a follow. Go ahead and smash that follow button with the giant yellow square, and feel free to turn on bell notifs to keep up with all of our shows and to be made aware of real-time market news data all across the globe. And we're going to stick around for the next couple of cycles, and more than happy to take you guys on the journey. And thank you all so much. And as usual, these spaces are recorded. So thank you, man. Thank you for the kind words. Don't feel shy. Feel free to come on up whenever you'd like. We're here pretty much almost every day, man. So I think next up is Dow. Dow Chemist, what's going on, brother?
Hey, what's up, guys? How's everybody doing? Thanks for having me. This was a great conversation, so taking a lot of insights and alpha in. Not much in terms of markets, right? Just very bullish on something that I saw today, so I wanted to share that with the panel. I'm actually in Brazil right now, hanging out my girl and my little bro, and it just so happened that the Central Bank of Brazil released that they're working on a CBDC that will be following the ERC20 standard. So I found that was very interesting because I think it was maybe a few months ago that the equivalent of a central bank in France was working with the equivalent of a central bank in Switzerland, with the financial authority in Singapore, and they were working on what was revealed a couple weeks ago, a fork of Curve. So it's very interesting to see all those different central bankers. Now, obviously, people push back because they have this freeze capacity, but I think people are not bullish enough in the sense that different central bankers around the world have their tech team or innovation team actually looking at DeFi rails and looking at those things as potentially one way, maybe not the only way, but one way to represent CBDCs and to be able to convert those CBDCs against other central bank CBDCs. So I found it very exciting. I don't know if you know that Brazil is very forward thinking when it comes to crypto. There's still a lot of bureaucracy. It's not a panacea for crypto, but it's a good push, right? And I'm not going to tie it to any geopolitics, things like BRICS. Sorry about that. But I did think that was a great piece of news. And just to throw a question at Rob, since we have you on the panel, right? I did have that weird face when you said you're bullish on Solana. Just a question. I would say I'm an ETH maxi, right? And in my process, I'm always curious to hear like the thought process, because the way I think about this space, right? I think it's great that there's so many chains, that we have the Cardanos, that we have the Solanas, and so on and so on, right? And the thing is, it takes time to learn about every single chain, and so like my way of thinking is there anything that those chains are doing, or that anything that we can do with those chains that we can't already do on the biggest chain, where there's the most amount of developers, the most amount of investment, and also actually the most amount of innovation, right? We talk about layer twos and ZKs and restaking. A lot of the cool stuff or narratives happen on Ethereum first. So is there a process by which you go through looking at different chain and you decide, hey, maybe it's worth of my time to look at something like Aptos, or to look at Sui, or how do you go about looking at different chain? And does that reasoning also something that you look at?
It's a good question. It's a detailed question. So you have to think about this: faster and cheaper. So everything that has come about in technology that gets adopted is because it's faster and cheaper. And you can go through, information became incredibly fast and cheap when the internet came out. Movies became incredibly fast and cheap when YouTube and Netflix came out. And I think when you take a look at payments, I mean, Bitcoin in the very beginning was pretty fast and cheap, and it kind of slowed down because of the layer one. And then we take a look at what happened. I mean, if you want to take a look at Bitcoin Cash, that became faster and it is cheaper, but it kind of fell to the wayside. But it's making a little bit of a comeback even now. So like, there's two ways of looking at crypto digital assets. Is it something that I'm going to sit around and hold forever because I believe in the tech? I hate to say it like that. I believe in the tech, like that meme that's been out there forever. Or when you take a look at it and go, okay, this could probably pump pretty well because either it's faster and cheaper, or it's because it's a little bit lower on the totem pole and it can do X percentage more gains, as opposed to something that it's like number two, we'll say like Ethereum. Market cap for Ethereum, I think we're looking at 200 plus billion. And Solana, we're looking at par 10 billion. So if you were like an investor and you're looking for return on investment, where could you see that? Well, it's kind of hard to move from 224 billion and double that price. But for a Solana, maybe not so much. And then we take a look at Ethereum. I love Ethereum. And my portfolio right now, it's 75% Bitcoin. And it's in the 10 to 12, and I think might be higher than that with Ethereum. And the rest are alts. But that's when I look at it, I go, well, I think that this could do pretty well in the next cycle because of just the narrative alone. If you take a look at Solana versus Ethereum, I don't know what the transactions per second of Ethereum on a layer 1. It's pretty slow. That's why they have all the layer 2s, which I understand, which is why I own Polygon, which I like as well. But if I take a look at it, I go, well, Solana's pretty fast. It's pretty cheap. And if you use some of those wallets like Phantom, I mean, things move around pretty damn quick, especially like the NFTs. So like I understand with Ethereum and all the cool stuff does happen, and it happens first, and there's a lot of developers. But as far as like, am I going to hold on to Solana forever because I think it's like the greatest thing of all time? No. I just think that it can probably do pretty well in the next cycle. So I hope that answered your question.
Yeah, that did. I appreciate that.
Yep.
Man, fellas, it seems we're being blessed by the Lord. We're here joined by the next head of the Federal Reserve, Chairman Carlos Air. What's going on, man? How are you feeling? What are you seeing in the markets, brother?
You mean former head? My tenure ended decades ago.
Dude, you're timeless, dude. You are the first, and you'll be the last, man. I just hope for your next term you can turn on the money printer and do us right, brother. But glad to have you up on the panel, man. I know it's been a couple of weeks since we've had a conversation, so welcome, brother. Would love to know your thoughts on today's print and what that means for equities and also for the crypto markets heading into 2024.
Yeah, thanks for having me up. No, it's been too long since we chatted about stuff. So let's start with the CPI print, which I think is really the story of the day. And it was interesting to see some of the market reaction. And again, one of the things I was monitoring sort of closely was the split between the reaction in Bitcoin and the equity market. Obviously, equity market finished up. You continued with the mega cap tech rally and the S&P 500. I think it was up 84 bips, somewhere thereabouts near the end of the day. And I guess the signal for me is, why you continue to struggle with the Bitcoin price action. I can think of plenty of different reasons why it continues to sort of hover in the same range. It's definitely not. I don't think it's bearish by any means, but why are we so? We seem like we've got another bear whale situation on here where we cannot break above this 31K resistance. Well, I'm interested in others' thoughts on that, but I'll just speak more broadly with for the actual numbers that are coming in. I think what's clear is that the disinflationary forces are in full effect. And I think if you read this print we get today and you combined it with the credit creation prints we've seen over the last 2 months, and also the hours work numbers, which continue to crater, and wholesales coming out of China, all of these sort of leading indicators, not necessarily the coincident indicators, but the leading indicators tell you that disinflation is on the horizon. And it's remarkable to me that even with the continued efforts to cut production by the Saudis, the oil market still cannot, really consistently move upwards and break out of this range. So I know there are folks expecting the second half wave of inflation reacceleration due to base effects. I can understand why maybe the last, half of this battle here is going to be the hardest on the CPI print. But I don't expect the surge of second half inflation that most folks are, or many folks are at least calling for out there. I think that, with the consumer, increasingly there's evidence that he and she is tapped. And that they're pulling back. I mean, you hear these reports anecdotally. I know it's only anecdotal, but even high tourist areas like Disney World are struggling. They're trying to slash and make discounts to attract people. I mean, normal areas of the economy, leisure areas, travel, where you have spending actually remaining relatively robust, they're still reporting declines in usual attendance and traffic, which to me is ominous for the future. But okay, that's not to say the next 6 months we can't hang in there on asset prices. I think you absolutely can, but the data is clear. I mean, demand is being destroyed, and it's taking It's taking much slower than many had forecast. Now, does that mean that we can't rally back up to a new all-time high? I think we're 7% off 7 or 8% off the all-time high in the S&P 500. Yeah, we absolutely can go higher. There's no reason we can't. So I remain relatively constructive. For the near term, I think Bitcoin should break out. Maybe it's overhang from some of the litigation that's going on. Maybe there's other exogenous factors that are affecting the marketplace, but it just seems stuck. Relative to equities.
So our next move is we should all go to Disney World and save the market.
There you go. I mean, listen,
Is what I'm hearing.
it's remarkable. It's remarkable how the economy has held in with these rates, which tells me one of two things: that the economy as a whole is either not as sensitive to rates, and somehow we can, with the debt levels we have, withstand, 5.5% Fed funds, which appears to be baked in at this point, 90+% chance of another hike coming up at the next meeting. Something structurally has changed in the economy, or there really is this long and variable lags thing that is much longer of a lag due to all the money that was put out into the system. Instead of the expectation that this was going to happen inside of 6 months to a year, it's going to take 2 years, which to me, that presents unique challenges if you're trying to invest and operate in this space. I mean, the play for 2022 has obviously, that was totally different than 2023. And you have to sort of be nimble enough to be adapting at these levels. And honestly, I think these markets are a technical trader's dream. I really do. I mean, I think that there are opportunities that I look at on my terminal and on my trading view every single day. And the only thing I'm restricted by is the time I can devote to the markets and watching it.
Yeah, and speaking of directional traders and trading in a range, really, one person that I brought up is Trader XO, man. He's definitely among the top that is absolutely slaughtered it recently, man, over the last couple of weeks. And great to have you up here, brother. And Joe, what you're saying.
One thing I wanted to.
Go ahead.
Yeah, sorry. One thing
Go
I
ahead,
just
Joe.
wanted to
Go ahead,
mention, one of the most fascinating moves of the day, which I haven't heard people talking about as much, which is generally something I focus on, what people aren't talking about, is this move in the DXY. I mean, you have a realistic shot here, guys, of breaking below 100 on the DXY, and that would be the first time broken below 100 since April of 2022. Okay, so that again, that's why you saw the move in gold. I mean, gold had a solid day today in direct response to the dollar breaking down. And the question for me is, why didn't Bitcoin? I mean, usually Bitcoin would respond pretty favorably with a big move like that in the Dixie. We didn't see it, so something's going on in Bitcoin. I think we should really carefully consider what that is.
And I'd love to know, XO, man, what are your thoughts? What's going on with Bitcoin, brother? Good evening, man.
Good evening.
Good evening. Great to have you on the panel. XO, how are you?
I'm good,
what are you
man.
seeing in the markets?
How are you? Are you good?
Man, I'm doing fantastic, man. Let me tell you. Did some physical therapy, did some cryogenic stuff. And I took a very long walk on the beach yesterday and got cooked, man. I look like imagine Larry the Lobster from SpongeBob with some fat on him, a fuscular lobster. That's how I'm feeling, man. But nonetheless, man, I'm happy to be here to talk markets with these lovely people, Tucker, Rob, Joe Carlisier, former and future head of the chairman of the Federal Chairman Reserve. I'm here with Matt, Eric, Max, Dow, and Beardy. And with you, man, welcome to the club.
Thank you.
Glad to have you.
Thank you.
Brother.
Thank you. Full house in tonight, I see. But yeah, just on the back of what Joe said, I think we're in for some very interesting dynamics. I think it could be the case where, there's so much stimulus and QE into the market of 2021 that is it truly the lag effects of higher for longer, which aren't quite being felt just yet? Probably we see those effects later in the year and perhaps end of Q3 or towards the end of Q4
next year.
Yeah,
next year.
I think also what was interesting, the number of I think I saw an article by Yahoo earlier in the week, and the number of CEOs that got laid off, or the number of CEOs that walked away. Essentially, it's interesting times ahead. I just get the feeling or the impression that personally, I think it's to do with lag effects that the Fed went through such an aggressive rate hike policy, and maybe it is going to be the lack of credit facilitation, which eventually, cascades into the economy. But I think when you look across the pond, in the UK, inflation is pretty shocking still in the UK. I still feel as though the Bank of England, the ECB have got a long way to go to really get a curb on inflation over here. So I'm not sure how that dynamic sits, especially with the dollar obviously trading lower, which is pushing the GBP and the euro even higher. Now, as for Bitcoin, I still believe it's really in a precarious position for me. It's like, as an investor, do you buy at this level or do you wait for a pullback? But I mean, I can imagine others will probably feel a fear of missing out if Bitcoin starts breaking above the 30k, the 32k level. I suspect that many participants or Bitcoin holders will be celebrating that fact. But I think it's also a very interesting level to be cautious around, because I think seeing Bitcoin trade above 32, all well and good, but if it gets back below 32k, I think that could essentially mark out the top of the trading range. Personally, I believe. Look, I still suspect that, for me, Bitcoin is still in this massive macro accumulation phase, whether that's the range between 16 to 18k and up to the highs of 32, 34, potentially. But overall, look, I think when I think about the crypto market from a general space, I think also going to get obliterated. Personally, I think not all of them, because you will get the odd anomaly that does perform quite well, sometimes narrative driven. But as somebody who is now looking to seek opportunities in the market, by no means am I bullish, because I think if you're heading into a recession, or if there is a recession, one of the first things that I'm looking for is disinversion of the curve, because obviously we've seen in previous cycles when there's a curve inversion and then you get the disinversion, PMIs often lag the curve as well. So I'm just really curious to see what happens this time around. I don't know what the answer is, but am I looking at the probabilities of the 2s10s and the 3-month and the 10-year and the 530s to disinvert? Possibly, and then let's see where we are with the PMIs. Generally, when the PMIs are expanding or the trajectory is to the upside, that's generally a risk-on scenario. So we've had growth really slowing down. And I've got a question for Joe. What is your take on the fact that we've got the PMI slowing down? We've seen services being quite resolute in the sense where they still aren't in a phase of contraction, which is obviously driven by the fact that the services sector is contributing to wage inflation as well. What's your thoughts on the PMIs? What's your thoughts on growth still going through a phase of contraction? And what will it take? Could we see growth be further impacted to the downside, where perhaps we see this trough form over the next 3 to 6 to 12 months, which, would be a great sign that perhaps this is where there's some stability now, the bottom of the velocity of growth slowing down seems to be tailing off now. I mean, I'd love to catch your thoughts on that.
Yeah, so it's a great question. So whenever you're looking at indicators, and I'll share with you how I digest them on my spreadsheet. Any indicator, and I'm talking about real economic data, not technical indicators on assets. Real economic data, you have to instantly say, okay, housing starts, PMIs, look at initial claims, continuing claims. Put them in a box, and they should be in one of 3 boxes. They should either be a leading indicator, a coincident indicator, or a lagging indicator. So manufacturing tends, and housing, by the way, then tend to both be leading indicators. Labor tends to be a lagging indicator, meaning it's usually the last thing to respond. Unemployment claims, those sorts of things are the last thing to respond. So then you go to the coincident indicators, and that's usually the services, right? So in traditional cycles, what you tend to see manufacturing and housing roll over first, and in particular, in our economy, you have to continue with every recession, continually discount manufacturing numbers as terms of how far they are leading, because of the fact that manufacturing itself is not the predominant part of the U.S. economy. Okay, so services is dominant. So really poor, recession level manufacturing numbers, they don't necessarily mean we're on the verge of an instant recession, because you really need services to be impacted. Now, with the services, okay, you need to have unemployment start to rise, right? So now you go down the sequence, because ultimately services will remain robust so long as as people have a job. And what I think you tend to see first, that the incident, like one of the things I look at first is like hours worked. And, the people keep focusing and hammering on how strong the job market is, when in reality, we have continued to see hours worked sort of crater over the last several months. What that tells me is that employers are sort of trying to kick the can down. They're trying to delay the inevitable. They're betting on the second half rebound of the economy and hopeful that they don't have to let employees go. And they're particularly reluctant to let employees go because of they've read nothing about how difficult it is to find labor for the last 2 years, right? That dynamic changes when the math just doesn't work and they don't have a choice. They have to let folks go. That's really key. So from my perspective, whenever you're analyzing these situations, you want to look at who is the most vulnerable. And in our framework right now, I know many on FinTwit, and I've been in a lot of these rooms discussing like why commercial real estate is probably one of the more vulnerable sectors. I disagree with that because a lot of these firms have balance sheet capacities to operate at losses for a long while. The Blackstones and so forth, they can operate for years with negative real returns. What I happen to think is the weakest are the junk companies, right? The junk debt companies that are surviving on low interest rates. And if you look at that, most of that debt, and I analyze this, I think, with Ross, who's in these rooms quite frequently, most of that gets rolled in early to mid 2024. And they're rolling in some cases 4, 5, 6% higher than what they would normally had access to years ago. And right now, effectively, a third of the Russell 2000 index, 1/3 of those companies are effectively zombies. They cannot survive at the current interest rates, but they haven't rolled over, and there hasn't been imminent, sort of pain that we've been expecting for years now, because of the simple reason that they haven't had to roll it, right? They've delayed it as long as possible. They're continuing to hope against hope that something will change on the rates front in the early part of next year. So when I rudely interrupted you and I said 2024, I'm telling you that if the rates remain where they're at right now and they're rolling, I think it's something like $900 billion worth of junk bonds in the early part of next year at these rates. Firms are going to have to have an exodus, mass layoffs across the board, and that's going to affect services. It's going to tighten credit even further, and not just rates, but actual access to credit, because people are going to be scared of lending to the folks that are on the precipice of potential bankruptcies. So you've got a lot of dynamics that are, I think, coming to a head once that junk debt has to be rolled. And unfortunately or unfortunately, depending on your perspective, I don't think we're there yet. I think we still got a few quarters, and I still think there's stimulus money in the hands of a lot of accumulated savings of the middle class. So, to me, like, I don't see anything imminent in the way of a collapse or significant downturn in the next couple of months here. But I think as you get into next year, unless inflation is absolutely smoked and like down 50% over the next year, another 50% to bring us to well under the 2% target, I don't think you're going to see any easing off from the Fed. I think this is part of their plan, and it's just going to take a while. And Powell reiterated once again in the speech yesterday that he expects balance sheet roll-off and the rates to continue at these levels for at least a couple of years. That was his comments.
Yeah, I think that's pretty much spot on that, Joe, with what you said. I do also believe that this is going to take much longer than people initially anticipated. And for that result, I think it's going to be a very challenging time from an investment perspective as well. From current levels, it's like, does one become more tactical, which is certainly what how I've been playing it, to be honest with you. Not so much from a positional sense, but more from a macro tactical sense. And I think that's probably the way I'm going to continue looking to trade the markets. But yeah, overall, it's really fascinating to see what happens and how this plays out in the second half of the year. Certainly with whether we do see the lag effects of credit tightening really start kicking.
Yeah.
But yeah.
And one thing just to think about too, okay, just to think, in many ways, the SVB scare, or some people call it a debacle, whatever. I don't think it was a crisis, but in many ways, that is made the system respond very rapidly from some of these banks to shore up their balance sheets. Let me explain why. And I have folks that are very close to the situation that I've talked to about this. If you remember, Once SVB happened, you saw a precipitous fall in rates across the curve, right? Both short and long end rates fell 2-year, cratered in terms of its yield, and same as the 10-year. A lot of institutions had a window there, okay, because once rates went down, the value of those securities went up, right? That's how basic bond math works. Once that occurred, they had the ability to reconstitute, sell some of their losers, shore up their balance sheet from a cash perspective, and also have the backstop of the BTFP where necessary. That has made the banking system more robust than it was before SVB. So now, as rates have risen again, and you're back over 4.74 on the 2-year and 3.86 on the 10-year. Now, if the rates go higher from here, which it's very possible we make a new, actually we did make a new cycle high, right, on the 2-year. Made a new cycle high just in the past couple of days here on the 2-year. If rates go higher, you move in the 2-year into the 5.5 range. The banks are a little bit more well protected. Remember, the whole reason they were struggling with deposit flight is because the securities they have decreased in value considerably. Well, some of the weakest securities have been sold in the marketplace when you had that reversal post SVB. So that was very healthy for banks to be able to unwind some of that paper. So it's just
there was a.
Go ahead.
Oh, go ahead, Joe. Oh.
Sorry, yeah, Joseph, I've got a question for you with regards to the 10-year yield. We know for the last 9 months or so, it's been trading between the 350 to 425 basis point level. For me, it's starting to look like it's higher for longer, which could have obviously implications not just for the financial markets, but for the manufacturing sector and the economy at large. My question is now, long story short, the US economy, I don't feel as though it can support a yield curve 100 basis points plus, above neutral. Will that? I certainly think it could, and just wondering what your thoughts are. Do you think it will eventually produce some form of a painful deleveraging further down the line?
Yeah. So let's just talk about your first premise about so the notion of an inverted yield curve is actually it is a counter to higher for longer. The fact that the 10-year right now is yielding 3.86, and you've got a 90 basis point actually, what is it for? Yeah, 90 basis point discount to the 2-year is telling you that the market, at least as it currently is constituted, expects the Fed to win. They expect the Fed to get inflation back down closer to its target. That's why there's that spread. And the reason why is because people would rather lock in that longer term rate because they're not convinced that short-term rates are going to remain as high as they are right now. Now, higher for longer can mean another year, right? It can mean another year and a half. But when you're theoretically, the 10-year should just be a series of 1-year instruments, right, with a slight risk premium due to the duration. But from the standpoint of where it sits right now, okay, the fact that it's still in this range and that you still have not taken out the high from October of last year, that tells me that the bond market thinks the Fed is closer to conquering its battle with inflation than the market anticipates. I mean, if you saw the 10-year breaking out to new highs in its yield, then yeah, I mean, I think then we're nowhere near recession. But we've been persistently inverted, and the uninversion is usually the recession is here. So what I'm looking for is that uninversion to start. But I don't know if that answers your question, but that's generally my thoughts on the inversion and what to read from it.
Yeah, it's fascinating to hear that. It's so from what I've gathered is that you're pretty much looking at this inversion of the curve to perhaps signal the fact that we could see or mark the recessionary phase, I guess, is what I've understood from what you just
Yeah, because think about it.
Yep.
Usually when the Fed, just think of it practically, okay?
Yeah, of course.
Why would the 2-year yield be falling, right? Why would it be uninverting relative to the 10-year? Well, it falls precipitously generally right before Fed funds falls.
Yep.
And the Fed is cutting, okay, basically in reaction to what the 2-year is doing. That's why I think the Fed is usually always behind the curve. The 2-year yield is dropping very quickly because that's really the extent of the Fed's reach. The Fed goes basically to 2-year out. And why is the Fed cutting? The Fed is generally cutting rates because something's really bad happening in the economy. Even in periods where it's not like, imminent collapse like a COVID situation, keep in mind they were cutting in 2019, right, when the yield curve inverted because they saw across the board growth slowing across all sectors. And they were fearful that we were on the verge of recession, and that led into the repo blow up that you saw in, I think, September of 2019. So like usually when short-term rates are falling and the curve is uninverting, bad things are happening. And the Fed is responding.
Yeah, fully agree. That's essentially what I'm looking for, is a drop off in the 2-year yields and for the 10s to get paid higher than the 2s. Essentially, that's not quite the case yet, so still some way to go. Apologies if I'm taking up the mic for too long. One final question, I'll call it a day. But just looking at the NFIB small business data, from what I understand, obviously, we believe that it's somewhat of the gold standard in tracking the performance of U.S. small business economy. Now, the reason why small business matters is because it accounts for half of the total employment in the U.S. and 2/3 of net new job creation. Now, we understand that the NFIB ticked up in June to 91s from 89.4 in May. That obviously is a slight improvement, but what's your thoughts on the fact that it does still remain at more or less recessionary levels?
I mean, my thoughts are that we're on the verge of recession. Now, the verge can be another 6 months to a year, but I think the data is clear. Now, does that mean sell all your equities and panic? No, it doesn't. That's not how I approach things. So I have to always say that because people think when I'm, and it also doesn't necessarily mean that equities can't, I won't say hold up, but the things cannot be necessarily as bad as many expect, even in a recessionary environment. There's a potential for that occurs as well. But I guess, from my standpoint, when you look at these things, any data points, again, you have to always use your TA and apply a moving average, and FIB included, because ultimately, if you're throwing a ball down a hill and it's declining, it's going to bounce, many times. And that's how I look at a lot of these things. They can have short-term pops, but what matters is really the trend. The trend is your friend, as they say, and the trend is down. So across the board, I think you look at housing, look at autos, look at credit creation. That is, I mentioned that earlier. There's so many leading and coincident indicators that tell you that the economy is headed for rocky seas. And you can take that however you want. I mean, you could say, you know what, I'm just going to hold through this. It doesn't matter because I think there's going to be liquidity at the other end from the Fed, and that may be true. But I'm just saying, look, all you can do if you're going to be objective about the economy is to note that things are slowing. And I see this anecdotally across the board. You see it most notably, I think, in, like I said, the hours work numbers. If there's not been a single period in American history, for 100 years where hours worked is falling, at the level we're seeing it, and you didn't have an eventual rise in unemployment.
Guys, I actually have a question for the panel, right? I know you guys are very knowledgeable in macro, whether it's myself, quite honestly. I really don't. I just think if the market is really scary and people are panicking, I bid, right? So I do have a question for EXO and Chairman Carlos here. So wanted to ask you guys about how the macro picture in your eyes played out most surprisingly to you guys now versus at the start of the year.
Sorry, could you repeat the question at the end? Just lost the last part.
Yeah. Are you able to hear me now? Testing. Am I good? Yeah. Wanted to know how the macro picture played out, right? Most surprisingly to you and Joe, now versus at the start of the year. What surprised you guys the most leading up to July of 2023, in comparison to your view in 2022, late 2022?
I don't think anything has surprised me, to be honest with you. The fact that, look, if you look at the crypto markets, it was in a downward trajectory for the best part of, throughout the majority of 2022. We've had the first significant bounce or rally on Bitcoin, which many perceive to be the bull market. Personally, I'm not convinced it is the bull market. For me, it's just a range. It's just a reaction off the lows. Demand exceeds supply. But in terms of altcoins, Wabi, it's I'm not too emotionally involved in Bitcoin. For me, if I see a good trading opportunity, I'll take it. But ultimately, primarily, I've always enjoyed trading altcoins because they are the beta asset to Bitcoin, which Bitcoin is the beta asset to equities and the Nasdaq and whatnot. So, for me, my real interest lies in altcoins. I think, look, at the end of the day, um, we can all claim to be trading geniuses or whatnot, but ultimately, we're here to make money. And for me, the best opportunities that I've ever come across in the 7 years that I've been trading is primarily in altcoin trading. And for me, that's where most of my time is spent nowadays. Even though I do still enjoy trading FX, commodities, indices, occasionally from time to time, at the end of the day, the primary objective for me is not to become a genius, but keep it simple, stupid, and try to identify where the volatility is likely to be, whether that's to the upside or to the downside. And for me, part and parcel, largely, it's primarily been trading altcoins. But like I said, I think in terms of the macro, nothing has surprised me, and it's something that I've alluded to many, many times in the past. That welcome to the liquidity games. That I tweeted about this towards the end of 2022. In fact, it's on my timeline that 2023 will be a very difficult year for investors, but it will be an absolute trader's paradise in terms of volatility, in terms of the not in terms of just like extreme volatility, but more of a trading range. And it has been very, very choppy. You've got to understand from the best part of June 2022, where the highs were in Bitcoin, where the highs was in equities. It's literally taken us a whole year to get back to those levels. What has price done in those 12 months from June 22 to June 23? It was primarily trading within a massive macro range, where equities is now broken out, Nasdaq has now broken out. The only question that I have with equities and Nasdaq, could they go higher? Yes, but would one be willing to take on that risk unless they're hedged? Maybe. But then again, when you look at the money markets and you can just print 5%, risk-free, then surely that's got to be an attractive proposition where we could see money flows lessen over the coming months into the equities and Nasdaq, and perhaps money being parked over the summer period into money markets and just creaming that 5% risk-free return.
Yeah,
Go ahead.
yeah,
Go
that's
ahead, Joe.
great, XO. So I have, if you followed me long enough, I was bullish for most of 2022. I bought all the way down at various different periods when I could and had free cash flow in Bitcoin and in equities, and I was very happy I did. It was frustrating how long it took for us to find a bottom in 2022, but I was fairly confident based on the economic data I was looking at that we weren't close to a recession. And I, was posting about this perhaps to the annoyance of many people on my Twitter feed about how this is not a recession. There's not clear signs of a recession. I don't know why people are overreacting to the equity market decline, because the economic data itself remained relatively robust. Now, here's to this point what I was to your question is, what was I surprised about? Through the beginning part of this year, I've consistently seen more and more examples of the actual economic data souring. And what I've been continually surprised at to this day, and not necessarily that I'm disappointed at, because I have big equity holdings and big Bitcoin holdings, is how resilient mega cap tech has been and how resilient the Bitcoin market is, right? In the face of impending economic data that is rapidly decelerating. It's showing a clear, unmistakable trend towards deceleration. And the markets has basically said, why me worry? Like, I don't care. It's just we're going up, and you can be damned if you disagree with it. And it's really frustrated a lot of bears. I mean, I know some of the folks that were in these rooms that have gotten blown up because of their efforts to short the market. And I was cautioning people against this because, to me, I think that looks like a foolish gamble, at least in the near term. But overall, I mean, to answer your question, the resiliency of mega cap tech, who everyone had written off for dead. I mean, there were people last year who said tech will never recover, that these companies like Facebook and others are dead and they're never coming back. I mean, they have absolutely ripped. But the counter argument has been that this sort of really strong price action for mega cap tech, it is not translated into the broad market. It's a handful of stocks, which, if you're an index investor, as I principally am, you don't really care, right? I don't care that it's only 5 or 6 stocks as long as the index is headed higher on a market cap basis. But look at even the Russell and micro caps. I mean, they are still struggling and not really having a great year. I mean, you're up 5-6%. So from my standpoint, I have been basically taken by surprise as to the concentration and strength of the mega cap tech rally, which I think many were.
Yeah. I think John's got a great point there with regards to the market breadth and the divergences between the equities and the indices and the Russell. I think for me, I think I'm not blowing my own trumpet here. I was very quick to understand in 2021. Late 2021, the possible effects of a credit tightening cycle and de-risk completely across the board. And I've never really had the appetite to go fully risk on in the markets, in all honesty. Does that mean I bought Bitcoin at the lows? No, I didn't. But I think sometimes as a trader, we're not going to get everything right. I certainly didn't go all in on Bitcoin, but I can take some comfort from the fact that I've, in terms of drawdown, I've had literally zero drawdown throughout the last 18 months. So my portfolio has been growing from a performance perspective. But I think what's really been somewhat not surprising, I guess, is the base effects of liquidity flows in global markets and how that's transcended into, risk on appetite in equities and NASDAQ and Bitcoin for that matter. When we look at the correlations, I recall listening to a Darius Dale stream not too long ago, and there was around about 72% correlation between liquidity, and Bitcoin, and I think slightly higher in equities and Nasdaq as well. So I think that's certainly something to take into consideration. By no means on an early basis, like I said, would I certainly just weigh heavily upon liquidity flows or correlations between the various markets, but I certainly do feel that's definitely had a part to play. And like Joe said, I probably have been surprised about the fact that growth has been slowing down. The curve has been heavily inverted across various tenors and spread differentials. Yet here we are with some resilience on equities and Nasdaq. The big question is this the start of a bull market, or is it more of a relief rally, or is it dead cat bounce? I honestly don't know the answer, and I don't intend to guess what the answer is. For me, ultimately, as a trader, there's levels to be traded technically, and that's all I'm looking to do, just keeping it very, very simple.
Yeah, and that's a great point. I got to
Excellent.
jump, but that's a really, really important point, right? Because as much as all of us can get tied into these narratives about is it a bull market, is it a bear market, you can develop a clear framework right now based on I'm talking about elementary sort of technical analysis as to where your exits and where your entries are, right? If you want to remain, even if you're skeptical of this market, if you want to remain long it, but want to jump out at certain key levels, like the 200-day moving average. I mean, basic things like that. That is a much better play than getting tied to a narrative that I'm going to just sit out and hang out in cash forever. I don't think that is a constructive strategy for folks, and too many people, especially younger people, they really get burned by those sorts of things. And anyway, I got to jump. Pleasure talking with you, Exo and Matt and everybody else on the stage. Wabi, I'll catch you guys later. Okay.
Joe, it's been an honor, man. It was great having you on the panel. And I see we have, close to 500 people in the room. If you guys are enjoying the space, feel free to follow us here at Because Bitcoin. Feel free to smash that follow button, turn on bell notifications to keep up with real-time market news data all across the world, and also to keep up with all of our shows. We do these roundtable spaces all throughout the week, each and every day, right around 4:15 to 4:30 p.m. Eastern Time. Although we do have some other shows that do cater to our guests, as we will be having more of that. So your support means the world for us. And we've been around for about 7-8 months now. And we have a heavy emphasis on all things digital assets. And, we enjoy speaking to traders like XO, investors like Carlos Air, and also Rob here as co-host. Feel free to follow all of our speaker panel, and shout out to you guys in the audience that cater to the Twitter algorithm and support small startups such as ourselves. And XO, I see you mentioned Darius Dale. One thing that I do want to throw attention in your way. Have you seen the size of that man? Have you seen how big his hands are? I think he's going to be the one to lift us to all-time high. And if I'm being quite honest, if we're talking about, how big someone's hands are, Tucker actually has some meat mittens on him, man. You should see him in person. The dude's an absolute freak. Tucker, 6'2", 260 pounds. He's country fed if I've ever seen somebody. This guy is like Brock Lesnar. But XO, brother. In all seriousness, man, I know we were also talking about narratives and how you're paying attention to the
Yeah,
altcoin market more and all that stuff. I want to know what narratives, brother, have you been paying attention to that could develop, a strong thesis going into 2024, 2025? Would love to know
yeah.
your thoughts,
Well,
man.
first of all, I'm not going to apologize for being bearish on altcoins for the last 18 months. I think it's paid me very handsomely. But you know what? There comes a point where I've got to recognize that it's time to slow down from the bearish thesis on altcoins. If you look across the board on various altcoins, majority are 80-90% down from their all-time highs. That is significant damage. I think many people are still left reeling the wounds or recovering from their losses. Unfortunately, it's just the dynamics of the market. But I think now you really have to be excited about the prospects of, well, you know what, there's some great projects coming out. There's some fantastic opportunities to scoop up on altcoins. I'm not quite interested just yet, but I think it's a fantastic time now to start researching over the next 3 to 6 months. I don't really see any narrative that's going to transcend alts and propel them even higher just yet, but I am increasingly excited at the opportunity that lays ahead, whether that's 6 months' time or whether that's 12 months' time. I think ultimately, when I look at the bigger picture, I'm really looking at the layer ones and the layer twos. So if you look at Ethereum, for example, we know Ethereum, it's got a very good ecosystem, it's got a very good community, brilliant NFT space there, but I still see the same problems circumventing and occurring, which is going to be the gas fees once Ethereum usage goes through the roof. That should then having a good effect on alternative L1s and L2s for that matter. I'm sure they'll come into their own. But for me, I'm still very much inclined to believe that Solana will do very, very well. I think, again, when you look at layer ones, you have to understand what's the development community like, what's the overall consensus of the community like. And when I look at Solana, I think it still stands out as something that's been established for quite some time. It's corrected significantly from its highs of $220, $230, $40. It's down at, $20 now? I think if there comes an opportunity where in the next 3 to 6 months we see a fairly decent correction in the markets, if there is some form of event-driven action, I think anything around the low tens or even single-digit dollar, it's going to be fantastic buy. I like the fact that they're also expanding. Again, I've got a very good friend who works over at Tensor. I think compressed NFTs are certainly going to be something that we will see more often and eventually become a buzzword within the space. And you're not going to see compressed NFTs anytime soon in Ethereum, but all of a sudden you're going to see compressed NFTs in the Solana ecosystem. That, I think, is also going to be a catalyst in the Solana space, that you're going to get more trading activity, NFT activities in these spaces. And not only that, I think when you think about altcoins, well, how do you get the outside world to partake in the crypto space outside of Bitcoin, which at this price, I mean, let's be honest, would anybody really want to risk buying one whole Bitcoin at $30,000 versus, classic example is if I can buy Shitdano, aka Cardano, at 3 cents and put $1,000 in there and it pulls off 100x, happy days. And I think that's going to be the case with NFTs moving forward with the adoption of global mobile wallets. And we just saw, I think today, I don't know if you caught the news earlier today about Google integrating with NFTs with their Google Wallet. Did anybody catch that early today, or is it just me? So there was an article.
I think it was just you, brother. I didn't catch that news, man.
That's the first for you, Abby. But
Yeah,
you've been sleeping too late.
yeah,
But
I know, man. But if that was today, brother, then yeah, man, I hadn't really paid attention to much outside of the CPI news, man. Wednesdays I usually like to do my recovery day, my physical therapy, my body tempering, cryogenics, infrared sauna, things like that, man. I'm trying to get big and strong like Tuck, man, so he doesn't make me look small next time we meet up for our
You'll
next
get there
conference.
one day, Wabi. You'll get there one day.
I really do.
Did EXO cut off, fellas?
Sorry, I'm back again,
You're
guys.
good now.
Yeah. So I really do believe, if you look at Google Play, they announced a big shift in policy, allowing developers to incorporate digital assets such as NFTs into their apps and games in the store. Now, if you really think about it one step further, if we do see a wider adoption of NFTs, I think it's only going to be a matter of time before you see the likes of Apple Wallet, Google Wallet integrate with NFTs as well. So who knows? Who knows? I think there certainly will come a time where these big, large players, tech firms, will recognize the impact or the social aspects of NFTs. And again, I think those ecosystems that can support NFTs will do very well in the near future.
Yeah, and I definitely do see some adoption coming from like more along the on ramps and off ramps. I know this isn't a show, by the way, guys. I'm not endorsed by them or anything, but things like Kato Money, they offer a they offer a pretty good on ramp and off ramp, and I think a lot of the innovation for the next cycle is definitely going to come from NFTs. And I know Yuga Labs is also developing an ecosystem where you're going to be able to use your NFT for their other side metaverse game and things like that. But that can be a discussion for another time. Hopefully, we can have some of those guys and sometime in 2024, and we can talk about all that stuff. But I know Apple has some sort of like partnership with Render with some of their graphics chips when it comes to like not VR but AR for augmented reality. So some pretty cool stuff in that regards. And I actually think that Apple is actually going to lead the next wave of tech. And sort of like this theory that I have, EXO, and something that I wanted to get your thoughts on is, the 2020s sort of being the 1990s, right? What the 90s was for the Nasdaq, right, and the stocks that comprised the Nasdaq at that time. Perhaps that's the 2020s for crypto, right? And there's always like an institution that like leads that charge, right? And I think that institution for crypto is going to be Apple with their headset. I know
Yeah.
for some people it's like, oh, it's a fad and all that stuff, but I don't think it's a fad at all, man. You see all these kids, right, that are like 12, 13, 14. They all have iPads. You know what I'm saying? Kids that are like 5 years old have iPads. They all have.
Yeah.
Yeah, go ahead, man.
I still, I'll be honest with you, I really still struggle to see. You see, the key word for me is when people mention the word crypto. When they mention the word crypto, are we referring to cryptocurrencies in its own entirety, or are we talking about the blockchain? If we're talking about the blockchain, I do believe the blockchain is certainly going to have an impact on society, adopted in technology. But when we talk about digital tokens, shitcoins ultimately, I mean, the way I see it, I just think they're very cyclical in nature. 95% of them have a very good cycle in the bull market and die of death thereafter. So I really don't see adoption of cryptocurrencies. I do see a space for, or innovation for, or creation for a digital currency, not in the sense where it's going to be used as more of as a payment mechanism, but perhaps a points-based system, kind of how you have your club card at your local Walmart and you accrue points. Perhaps we could see some form of currency or conversion of points into cash, but through that mechanism whereby those cash rewards can then be spent, which is currently what's happening anyway now with the cash rewards. But I still struggle to see outside of Bitcoin and possibly Ethereum. Like I don't really see any altcoins out there that will last the duration of the next 5 to 10 years. I think majority of these will just die of death, and possibly Solana. I'm sure there's going to be greater, better things than Solana. Am I bullish on Solana on the next cycle? Absolutely. Am I going to be a buyer? Absolutely. Will I hold it all the way back down? No, I'll probably short it all the way back down again. So it's just, for me, it's just, look, at the end of the day, I'm bullish on blockchain. I'm not bullish on cryptocurrencies. I just think they are vehicles of speculation to make more money. And ultimately, if there's only one asset, I'm not a Bitcoin maxi either, but I think if there's anything that's going to survive, it's probably going to be Bitcoin for the long run.
EXO, and what are your thoughts on some of these L2 solutions like Optimism, right? We know that Coinbase is going to be developing, their own L2 on the OP stack called Base. And when we go on places like DeFi Llama, we see this huge disparity between the volume that Arbitrum is doing compared to Optimism, right? And if we're being honest, man, Arbitrum has turned into a shitcoin casino. And a lot of the projects that have been deployed on Arbitrum are failed projects from other chains that, make a proposal on Arbitrum, get a bunch of ARB tokens, and then they sell it to up their runway. Whereas Optimism, I kind of feel that at the current moment, there's more signals to be had, and the space on that specific L2 isn't as diluted as an Arbitrum, right? So would love to know your thoughts on that. And when we look at something like Coinbase, as far as the stock goes, right, you compare it to Optimism, like, there's huge disparity there, and I kind of think that ratio is going to be fixed over the coming years. And quite honestly, like, I'm betting on the actual token itself, outperforming Coinbase stock, and I truly think that Optimism is going to be used a lot as an L2 going into the halving and all that stuff for the cycle. Would love to know
Yeah,
how you see the L2 ecosystem.
I think ultimately you've got valid points there. Look, I think what you mentioned about teams jumping onto the Arbitrum bandwagon, we saw pretty much the same happen in early 2021, where teams were launching, let's be honest, bullshit projects onto Polkadot with a white paper with no real intention of, taking advantage of developing on the Polkadot ecosystem. Yet they're spinning off projects, although under the banner of Polkadot, they were spinning up ERC20 tokens to be listed on dexes. So, sometimes projects will do what's necessary to get the cash flow in. I don't really think that's a bad thing. I mean, if I was in their shoes, I'd probably do the same as well, but I'm not, thankfully. I think moving forward, like you said, it's the ultimate question is, look, I think L2s will have their day, and we really will probably see a propelling price on, speculation on L2s once we start seeing bottlenecks occur on the Ethereum ecosystem, especially on the gas fees. The question is, look, if one L2 pops off, they're all going to pop off at the same time. What you then have to decipher is essentially, or filter out, is essentially, well, which of the layer 2s or layer 3s are going to outperform the most to the upside. You look at the likes of Matic, Polygon, they've got a large ecosystem. There's a lot happening on Matic, but then when you see competitors such as Arbitrum, Optimism, Layer 0, and the others that are due to come out over the coming months, makes you question, well, are these going to knock Matic off their perch? Is it going to knock Polygon off its perch? Probably. I don't know what your thoughts are with regards to that. Do you think Polygon still has a role to play compared to...
Speaking of Polygon, man, one thing I'd like to do, maybe sometime, around this time in 2024, I'll try to throw together a mega space. You'll be the co-host, and we'll try to have Sandeep as a second co-host, and we can do like a Polygon deep dive and really get into the nitty gritty, man. I think that would make for some great content, truthfully. What do you think, brother?
I don't know how much he's paying you to get me and him on stream together.
I think that would make for some great content, man. Quite honestly, man, I think something cool would be like, who can bench press 225 more, you or Sandeep? My money's on you, though, brother. But
I can tell you how
Sandeep...
much. I could probably tell you how much I've made shorting Sandeep coin, but I'm not sure about bench pressing 225. I'll leave that to you, Abby. I'm getting too old for that game. I'm having to spray.
come on.
I'm having to spray WD-40 in my joints nowadays, mate. Mid-30s. It's no fun throwing around heavyweights like you young boys.
And just throw on some SBD elbow sleeves, man. Those work like a charm. And cryogenics, man. Whew, they help a lot, man. They help quite a lot, brother. But I think this is a good place to wrap up, man. I know, Evan, I know you requested to speak, but I think we'll just do like one more turnaround around the room, and then we'll begin to wrap up. But just to remind everybody, if you guys are new to the space and you're enjoying this conversation, we are Because Bitcoin. We enjoy doing these roundtable spaces discussing all things financial markets. If you guys are enjoying the spaces, feel free to give us a follow, and feel free to give the speakers a follow. We really enjoy connecting with newer community members, talking to people that are bullish on digital assets, Bitcoin, Ethereum, and of the like, layer 2s, all that good stuff. We also enjoy talking about other things too, right? Like how much we bench press, how much we squat, how much we deadlift. And, a little fun fact, Max here in the panel, our founder, he actually used to be a head NFL coach for the Minnesota Vikings. Max, man, you did quite of a job, man, recruiting some of these linemen, dude. How does that make you feel, brother? We're here with Trader XO, Matt. We had former head chair of the SEC, Joe Carlos there. How does that make you feel, man?
Hey guys, I apologize for any background noise you might hear. I'm in the car. It's time for me to go home and be a husband. It's been a long day of work, but I'll tell you, it's kind of a funny joke. I had no idea how big the Because Bitcoin team was. I'm not that big of a guy. I'm basically a statistical average for height and weight, if not slightly under in the U.S. And we all met up in Bitcoin Miami for the first time. And every guy that walked through the front door of the house that we rented was bigger than the last. First guy's like 6 foot 200. Next guy 6'1", 220. Next guy 6'2", 240. Then we got some 6'4", 6'5" guys walking in, and it's just like we literally had a football team there. I felt like a child next to the entire Because Bitcoin team. I think there's a picture of us at Ben Cowan's party. If you can find it somewhere online, you'll see. I'm 5'9", 5'10" on a great day. And I just look tiny next to everybody, which is just hilarious. But yeah, man, Minnesota Vikings and BB are collabing soon. We're gonna go to the draft together. I'm actually gonna attend the NFL draft, see if Roger Goodell gives me first pick for Because Bitcoin as a team. So
Good stuff, man. Love to see it. Love to see it. Well, yeah, guys, feel free to follow us. Turn on bell notice to keep up with all of our shows. And we'll see you all tomorrow. Evan, if you want to say something, though, before we close off, man, go ahead, brother.
Oh, man, yeah, sorry. I was a little late to this show, but hopefully the next one I'll have more time. Yeah, for what you guys were saying, a lot of great points. I'm hesitant on the altcoins, but alt roads lead to September. That's what I'm going with right now. That's all I got.
Yeah, man. For those of you who don't know, Evan does partake in the crypto war room. We partake in their spaces sometimes, so always glad seeing a mutual up on these panels. Pargal, brother, you have anything to say before we wrap up the spaces? Pardon me, I didn't really see you there in the crowd, brother, but
No,
what's
I
going on,
joined
man?
very late as well, man. Appreciate it. Nothing much to say. I was just basically going to mention about the British pound being very overvalued very recently because of the potential terminal rate going up to 650 bips. And I just wanted to fade this thing because UK inflation is all over the place right now. And at some point, the British pound has to devalue, right? So I was just basically going to mention that I was thinking of shorting this currency and would probably ask Trader XO if he had any kind of positioning on that already. So
Yeah,
that's it, really.
I wouldn't be shorting the pound personally because of the fact that, well, if the US is only going to be raising basis points for 25 and you know the Bank of England puts in another 50, then I'm not sure I'd want to be on that side of the trade. I'd probably be more reluctant, especially if we see continued weakness on the dollar, which is a concern as well for the Bank of England and the ECB, because that essentially pushes the euro higher, GBP higher, and until we see some form of strength, or at least the dollar reclaim around about the 100 or 101 level, then I would probably consider thinking about becoming a seller of GBP and euro. But until then, I don't want to step in front of that train until we see some decent strength occur and backed by good fundamentals as well. But I think the UK on its own has a much greater job at hand in curbing inflation. They were very much behind the ball compared to the US, and I think they've got so much catching up to do to get anywhere reasonably in control of inflation, but I don't think it's going to be for quite some time.
Yeah, I just noticed that the real yields from basically based on inflation versus what the bond trade provides.
Yeah.
There seems to be a very big negative on that, and US is actually doing the best in terms of that when you look at the headline inflation or the even break-even average of the inflation, right? So I think at some point UK will have to devalue that currency because that trade deficit is going to get even larger and larger. So I'm not actually looking to trade this immediately. I just want to see some weakness as well, which you're right about. And when that weakness comes in, I'll look to short the GBP at some point.
Yeah, essentially for me, if I'm looking for weakness, it's got to be in the crossbar between euro and GBP. Once I see weakness on GBP there, and then backed by with dollar strength, then I'll probably look to favour that trade, or whichever of the two from GBP and euro shows the greater weakness, and dollar showing some signs of relief. At that point, I'll probably step into a trade.
All right, guys. I think this about does it, man. I think we can wrap up here. It's been a great time, man. I hope the rest of you guys here in the audience have a good rest of your day. Shout out to the speaker panel. If you guys aren't aware, we recently closed a partnership with the OpenX Exchange. Put that up. Put that up on the panel. So, thank you all so much for supporting us here at Because Bitcoin. We do these spaces each and every day here on Twitter Spaces and on YouTube. If you guys are interested and are looking to connect with our community and myself, Max, Tommy, Tucker, and the rest of the guys, we do have some of our premium links in the bio. So feel free to check that out if you like. If hold on, let me just. Yeah, I'll just click mute. But anyways, where I was going with this is, yeah, shout out to OpenX. Thank you all on the panel for participating. For those of you in the audience, feel free to follow us once again, and yeah, go ahead, smash that follow button, and turn on bell notifs for real-time market news data. Keep up with all of our shows. Thank you, Max, Tucker, Exo, Eric, Evan, Pargal, Joe, and also our co-host earlier, Rob from Digital Asset News. Thank you all so much. We are Because Bitcoin, and we'll see you all tomorrow on our YouTube channel at 10:30 a.m. Eastern. Thank you all so much. Take care, and shout out to OpenX, our official partner. Thank you so much, guys. Take care, and God bless you all.